Brookfield Asset Management is the premium player on Team Brookfield, and we need to find out if they are living up to all that hype. Fasten your seatbelts, folks. This is going to be a good one. Brookfield Asset Management comes with a whole bunch of confusion woven into their packaging. They used to be part of Brookfield Asset Management, and yeah, that sounds almost nonsensical. However, not that long ago, as in, well, back in December 12th of 2022, the old Brookfield Asset Management, which had a ticker of BAM, changed their name to Brookfield Corporation, and their ticker then became BN. That sounds pretty simple. However, it gets more complicated because BN then split off a part of their premium assets into a new premium-focused asset manager that they then went and gave their old name to. So this new company became the new Brookfield Asset Management. At the time of this split, people who held the old stock received 1 share of BN and 4 shares of the new BAM. This was not a bad deal at all. Old BAM had quite a portfolio of assets totaling up to about $750 billion. These assets included real estate, infrastructure, renewable power, private equity, and of course credit. In addition, they also offered their services to the public, to private pension plans, foundations, sovereign wealth funds, and of course private investors. The new Brookfield Asset Management would focus mostly on growth, capital allocation, and investing in various projects. They have been structured as a premium slow growth income stock. In a nutshell, BN is their growth version, while BAM is the more passive income with a wee bit of growth. Join the conversation. Let us know in the comments if you are holding any Brookfield stocks. Your participation is, of course, well appreciated. Don't forget to like and subscribe to stay up to date on future content, and a huge thank you for that click. There is no denying that Brookfield Asset Management is a strong entity. Most of their assets are in North America, but they have been putting a strong push into the rest of the world. In fact, just recently they announced that they intend to buy Network International for £2.2 billion as they look to expand into the Middle East and Africa. Of course, just looking at what they are doing, how the company is structured, and the overall Brookfield umbrella, it is sure to be impressive. However, when I want to be really impressed, I need someone specific to talk to and in a language I can understand. For that reason, I think it is time to talk to our good old buddy, Mr. Math. As usual, we will start with some surface data, and Brookfield Asset Management has a market cap of $17.50 billion. Their beta is fairly average at 1.25, and their earnings per share come in at 7.02. When we look at their price to earnings ratio, it comes in at 6.05. That looks good, and is actually really good because the average in their sector is 25.20. I'm beginning to think from those numbers they may very well be undervalued, but of course once we get to fair value we'll know for sure. The price to book ratio, it comes in at 1.30, which is exactly the average, 1.30 in their sector, and they have a return on equity, it's a little low at 1.67%. I'd like to see that get a little higher. Let's switch over and take a look at the cash. When it comes to revenue, they come in at $3.93 billion, and their earnings come in pretty high at $2.08 billion. In fact, their projected earnings are to grow by 14.23% per year. Last year, they actually grew 16.4%, so that's not too shabby. Free cash flow, a little bit of an issue. We got negative $13 million. Don't like to see those negatives here. And for the first time, we're adding operating cash flow, and that's also in the negative at negative $16 million. So those are not great numbers there, and that has me a little bit worried, but so far everything else looks really fantastic. So let's take a look at their fair value. So their current value at the time of recording was $42.95. Their fair value, if you use a discounted cash flow model, it comes in at $98.35. Holy banana bread, that's really high. This makes them undervalued by 56.3%. That is just pretty darn good. Let's quickly jump over and take a look at the returns that we get with BAM. When it comes to their dividend, they have a yield of 3.986%. That is paid out quarterly in the amount of 32 cents USD per share. This dividend is really new, and as the company goes, they have said to expect to see it rise, so we're going to see what happens there over the next year or so. That payout ratio, really low, 6.03%. And I'll tell you, with such a small payout ratio, I'm beginning to think that raise in the dividend may be even more likely. When we look at their returns, we can't do a 3-year return. They've only been around since December. Their 1-year return, we did see the price fall from $43.93 down to $42.48. That would, of course, be a return of investment investment of negative 3.30%, total return of negative 1.84% after we add in those dividends. With this new Brookfield Asset Management, they did open on the high side, so you do have to take this statistic with a grain of salt. The 2023 stats will be much more reflective of how this company is actually doing. So let's look at 2023. They did rise from $39.72 to $42.48. That's a return on investment of 6.95%. Factor in the dividends, we get a total return of 8.56%. That's not too shabby. The only real concern I would have is that we don't really have a lot of history on the new BAM yet, but that of course is going to come with time. Let's take a look at the debt, because the debt I think is going to make or break this company. Their total debt comes in at $93 million. Holy banana bread, I'm really loving that number. They've also got a total equity of $11.52 billion. That makes their debt to equity ratio 0.80%. That is awesome. They also have in cash and equivalents $3.15 billion. Oh gosh, I'm liking that so far. Let's look at their short term. Their assets come in at $5.87 billion and their liabilities come in at $2.34 billion. That's not bad. Let's look at their long term. Long term, their assets come in at $8.10 billion and their liabilities, they come in at $111 million. This is fantastic. There's nothing I can complain about with the short term or the long term. Everything matches the way it should in an ideal situation. In terms of the full debt picture, it all boils down to the fact that Brookfield Asset Management has more cash than their total debt. This is a dream debt scenario, and I love it. We could complain that with a negative operating cash flow, it doesn't cover their debt, but really, it's not that important at all. They've got the cash. So what is the final verdict? Brookfield Asset Management is without a doubt a great looking company on the fundamental side. I would love to see, of course, a positive free and operating cash flows, but they are really flush with cash despite those numbers. This is a company I would consider as blue chip, as there really isn't any concerns with the math. I think short term, they are a solid total return stock with strong moderate dividends and some solid growth. This is not going to be the best stock for somebody totally focused on passive income, but yet it still is not a bad safety addition to diversify a portfolio. If you are a total return investor, then this is a stock worthy of some serious due diligence. I do believe we are going to see some solid overall returns in the mid and long term. This is just a nice looking stock. Now, I currently do not hold any, but I do want to open a position as I really like the fundamentals that much. Hey, if you want to choose my next deep dive, be sure to check out the community tab as we vote as a community for which company gets the honor. If your company is not on the list, drop a comment and it will get added to the deep dive pool I draw the companies from. Every week I remove the winner and the company that gets the least number of votes, thus freeing up 2 spots that I then pull from the pool. So be sure to check that pool out every week and help your favorite get to the top. Keep the learning going. Watch my video on purpose versus yield max linked on the left, or test YouTube's recommendation skills by checking out the video on the right. Your choice will decide the winner. See you in the next video.